For those of you who have just tuned in, welcome to our webinar. If you can hear and see me clearly, please drop in a yes in the as a comment in the comment box so that we are aware that you can hear and see me clearly. So everyone, can you all hear and see me clearly? Everyone all good? Yes. Okay. Hello, Afnan. Hi. Hi, Aman. Yes. Thank you for. Okay. All good. All good. Okay. Yes. Thank you so much, everyone, for being here and being on time. So I think we're expecting much more to be joining us. So let's give them 1 or 2 more minutes before we begin. So we'll begin at around 8:02 perhaps. So but for those of you here, okay, we got about I think around 40 of you all here. So and more. There's more and more coming. So, okay, great. But for those of you who are here, I'm just curious, right? How many of you are actually tuning in into a webinar today for the very first time? And how did you actually hear about this webinar? Can you all let us know? Let us know in the webinar chat. So that yeah. Let's keep this session very interactive. One LinkedIn. Okay, good, great. So yeah, to those of you who has just joined, welcome. My question earlier was how many of you here you're actually tuning into a webinar for the very first time? Friends, Facebook. Okay, great. From colleagues. Okay, great. Okay, good to know that most of you you're actually tuning for the first time as well. So nice to see all of you here. All right. So okay, I think we have quite a number of you already. So let's get things started. You know what has this business love to fans music? Very Fuad, you have some fans here. Okay, that's great. Okay, so it's 8:02. I think let's get this started. So hello everyone, good evening and welcome, a huge welcome all of you to our webinar today. Great to have all of you here. My name is Jia Ying and I'm from the Halogen Capital team and I'm your host for tonight. So nice to meet all of you. So from our past 2 webinars, we actually have been receiving quite a number of questions and it's usually circle around this particular question, which is, okay, what's the difference between Bitcoin and Ethereum? So how does it work? And is it really too late for you to start investing in Ethereum and whatnot? So yeah, to answer that question, we have 2 very wonderful speakers tonight to help you answer some of your burning questions. Okay, so yeah, now without further ado, let me introduce 2 of our speakers who are here to enlighten us about what Ethereum is and why you should be investing in it. And I couldn't be more honored to introduce them. So first up, we have Fuad. So Fuad is our executive director here at Halogen Capital, and he has a little bit about him, right? So he has 15 years worth of experience in asset management and has successfully managed over 2 billion ringgit worth of assets for a diverse range of clientele. So he has your government affiliated organizations to family offices, small and medium enterprises, private banking clients, and also high net worth individuals. So very wide range, very experienced fund manager. And at the same time, we also have Harith. So Harith here is a product manager at Etherscan, which is the leading blockchain explorer and organizer, and which is the leading blockchain explorer. At the same time, he's also the organizer at ETHKL, which is the Ethereum community in Malaysia. So in his pre-Web3 life, he has also been in many different industries. So he has worked in fintech, he has also been in insurance and also radio industry. So very wide-ranging combo as well. So yes, everyone, please meet Fuad and Harith. So Fuad and Harith, you want to say hi to everyone?
Hello. Hi, everyone. Thanks for joining in.
Hello.
Hello. Okay. Yes. Okay. I think let's get this started. So okay, maybe let me share my screen first. Give me a minute. Everyone can see my screen, okay? Okay. Great. Okay. So yeah, without further ado, pass the time to Harith, and then yeah, Harith, the time is all yours. Stage is all yours. So take it away.
All right. Good evening, everyone. And I'm being kindly invited by Halogen tonight to share about what Ethereum is. Just a quick context, I generally give like a 1.5 hour talk. So I'm going to try and condense this to about 15 minutes. So if you have any questions, feel free to ask. There's a Q&A session afterwards, and happy to answer that even beyond the Q&A as well. So the talk is titled Blockchain 101 Into a Rabbit Hole of Money, Decentralization, and Smart Contracts. Before I start, can I get a show of hands or a virtual show of hands? So if you find that you are in any of these levels, just put the number in the chat. So for example, if you've only heard of Bitcoin and you don't know any of the other items, you can put 1. If you've used the smart contract, you can put 5. All right. Cool. So I see mostly 1s and 2s. All right. Okay. So I think that makes sense. Generally, surprisingly, some of you have blockchain wallets, but I think probably more of you are in the level of have heard of Bitcoin and know about it, but not much of a portfolio. This talk is meant for you guys who are not necessarily at the 4 and 5 level. And before I touch on Ethereum, just to go and have a bit of recap about what is Bitcoin and blockchain first. So for those who don't know or might need some refresher, Bitcoin and blockchain are 2 different things. How I like to describe it is that Bitcoin is a subset of blockchain technology, which is also a subset of what's called distributed ledger technology. The analogy that you can think of is that you have a Toyota, which is a type of car, and a car is a type of transportation technology. So Bitcoin is like a Toyota, there are many other models of cars around, and there are also other types of transportation around as well. Except in Bitcoin's case, it is the grandfather of all cryptocurrencies and blockchains. So that's why people like to think of Bitcoin first. And sometimes people have this misperception of Bitcoin being the same as blockchain. And one key thing with Bitcoin is it's all about decentralized money. And it's having some form of money that no government or company or institution can stop you from transacting with is an extremely powerful value add that humans across history have never been able to have. So if you imagine you were a doctor in Syria before the bomb started to drop and you wanted to migrate away to another country, you can't transfer your wealth in the form of dollars or gold bars as easily as you would with Bitcoin or any cryptocurrency, because you can just write down your secret phrase, you can travel to the other side of the world and enter your secret phrase into an internet connected computer, and then you have access to all of the wealth that you have had before. So that's something extremely powerful that Bitcoin has provided that humans have never been able to access throughout our history. So then the next topic is on Ethereum and why does Ethereum matter? Why is it such a big deal? Why is it number 2 in the market capitalization? So the cool thing with Ethereum is that there is this thing called a smart contract. And it's one of these jargons that you hear and you get kind of confused, like, what does it mean? Is it a contract that I have to sign? Is it legally binding? So it's a bit of an unfortunate term, but to sort of unpeel the meaning of smart contracts, I first give a couple analogies. So the first thing you can think of is a vending machine. So if you were born 100 years ago, you'd think that vending machines are these magical things because it's a metal box. There's no human being. There's no intelligence behind it. But when you put 5 ringgit, you know that, and when you press the button for Coca-Cola, you know that you'll get 1 can of Coke and you'll get, say, 5 minus 2 equals 3 ringgit. And everything happens automatically without any human having to calculate this for you. And it would be very magical if you weren't familiar with modern technology. But if you are familiar with things like Microsoft Excel or what's called if-then functions, then you know that behind this vending machine, it's just a simple logic that checks if you've entered more than 2 ringgit, and if you press the button that corresponds to Coke, then we will release 1 can from the Coca-Cola shelf and return the balance of what you entered minus 2 ringgit. So it's very straightforward. The logic for it is already baked into the metal box, and it's done automatically. And another buzzword that you might have heard of before it's called Internet of Things. And one example that people like to use is that you have these smart refrigerators where you can have eggs, and then if your eggs are running out, then the fridge knows that the egg is running out, and it will automatically order for you eggs from an online grocery store and have it delivered to your house. And beyond the fancy imaginary of visualization of this smart fridge, behind it is just a simple, again, if-then logic and some smart sensors that detect the weight of the egg holders. So it's literally just a bunch of if-else functions that are happening. And smart contracts is a simple thing of combining the decentralized money nature of Bitcoin with these if-else functions of the vending machine and the smart fridge. You can imagine having a vending machine or a smart fridge where you are making these transactions online, but you are still relying on a centralized third-party form of finance where a bank that you are trusting is the one that is making the payment. Whereas if you can combine these if-else functions with a truly decentralized system where you don't have to rely or trust on any particular bank or third party, then you have what's called a smart contract. And the kind of explosion in technology, I like to equate it to when, if anyone here is old enough to remember when mobile phones went from the more boring types where you have a few games and maybe a simple camera to the iPhone generation where anyone can build their own apps on the App Store. You don't have to work for Apple to create an app for other people to be able to use. There is this huge explosion of like thousands or maybe even millions of apps, whether they are games or learning apps or videos. You can do all kinds of things that you couldn't before. So that's what a smart contract capable blockchain unlocks for their users. So where Bitcoin, you can transfer funds, but you can't really do very heavy logic. With Ethereum and a lot of other subsequent blockchains, you can do all these smart or automated things. So it is really like going from an old mobile phone to having a smartphone. And I would even say you can even consider it like going from a handheld calculator where you can just count numbers to being able to have a laptop that you can play games or watch videos on. And an example that Malaysians, I think, would maybe appreciate, at least from a couple elections ago, and I hope I'm not going to get in trouble with this example, is that if you can think of an election, a lot of Malaysians used to complain, like they would go to the election booth and they put a vote for, let's say, the red party, but then when they go back home, they don't know if that vote has somehow secretly been changed to a blue party or some other color, maybe because of some blackout or something like that. So there's always this question of trust. Like, do you trust the election commission? Do you trust that it's being done properly? And one of the kind of promises that a blockchain with smart contracts offers is that potentially you could, in the future, go into an election booth. You can put a vote, And then when you go back home, you can check an independent, neutral website, what's called a blockchain explorer, and you can see that your vote for the red party is still there for the red party, and it hasn't been changed to be going for the blue party. And you're not trusting one government or one institution, you are trusting thousands of independent, neutral providers. And that's something that is a real world use case. To be very clear, it doesn't exist yet. There are a bunch of technological challenges to be able to do that, but that's a promise of the technology that I think Malaysians probably would appreciate more than others. And I'm going to go through some examples of this smart contract technology and its use cases. And to be clear, there are literally anything that you can think of that you can create an app for is something that you can do on a blockchain with smart contracts. So to start off, one example is you have what's called a DAO, or a decentralized autonomous organization. It's another one of these jargons, but the example I like to use to explain this is that if you know Uber, which basically does what Grab does, they've also been doing a lot of research on providing these driverless cars, where you don't need a driver to drive you from point A to point B. You just need to enter Uber, and then the car will automatically drive you to where you want to go. But a DAO, what it promises is that you could imagine a world where you don't even need to have a driverless Uber, but a humanless Uber. So you don't have any humans working for Uber, whether it's in finance or HR or many other positions, because the logic for the car is completely done on the blockchain. So when you go into the car, you make a payment. All of this is done on the blockchain, where no human needs to process the payment. And for example, the logic for the car would also tell it to go for its monthly maintenance, or when it's reached a certain amount of kilometers that is driven, it will automatically schedule and drive itself to a nearby maintenance workshop to have itself repaired. And all of this is done automatically using just programming logic without any human intervention, and it's done completely transparently on a publicly available blockchain where everyone can see the code that is powering that car. Another example, a very popular example for those of you who have used a smart contract before, that you might know, is this thing called DeFi, and it's a pun on to defy someone, and it's short for decentralized finance. So if you've been working in the financial industry, any financial product that you can think of has probably been replicated in the blockchain space, where it can be done without any humans controlling it. So for example, you can have insurance that is done completely on chain. It could have loans that you don't need to like find a bank officer to approve your loan. And you could even do trades of different assets without a human broker or even a Bursa Malaysia to host your transactions. It's done completely on a public blockchain that everyone has access to. Some quick examples there is, so I mentioned being able to trade assets. So there's a popular website called Uniswap, and you can trade between different cryptocurrencies. And the cool thing is there is no company that is processing these trades. It's all done completely on chain, where the transactions are coded in. So for example, here, if I wanted to sell 1 Ether in exchange for this currency called DAI, which is pegged to the US dollar, I can do this transaction and I don't need a human being to approve or accept this transaction. It's done automatically using programming code. It doesn't follow any like 9 to 5 time. I don't need to be KYC or approved by any authority. I can do this from the comfort of my bedroom using just my laptop Uniswap without having to register or be approved by anyone. And a cool story with Uniswap is that the company behind the Uniswap website, Uniswap product, is American, and they have been told by the US government to block Iranians from using the Uniswap website because basically the US government doesn't like Iran. And the cool thing is that the company can block Iranians from accessing the website, but the smart contract itself, which exists on the blockchain, Iranians can still access those smart contracts, and they can still make these trades that they might want to have. And the Uniswap company itself cannot block these users from Iran to trade on their product. So it's completely permissionless. There's no authority that can block or stop you from doing these things. Another example is the DAI currency that I mentioned just now. It itself is automated DeFi product where it's pegged to the US dollar, and the mechanism for this pegging is actually very similar to how pawnbroking or pajak gadai works. So for those of you who don't know, if you have, let's say, a gold necklace that maybe belonged to your grandmother, but in desperate times, you want to get some cash, you could lend that necklace or store that necklace with a pawnbroker in exchange for some cash. And then let's say a couple months later, you can pay back that cash along with some interest or some fee to get back the gold necklace from the pawnbroker. So it's a similar concept, but then completely on-chain and permissionlessly. Yeah, so that's just a couple examples of DeFi. And I think the last example before my time runs out is on NFT. So some of you might have heard of this term. It's called a non-fungible, it's short for a non-fungible token. And there's a lot of things to talk about NFTs, but the gist of it, the key thing to highlight is that so if you know what fungible and non-fungible means, and if you're not sure, you can go and like Google it or ask ChatGPT later. But in the real world, most items are not fungible. Like if you have a cat, it's not replaceable with some other cat. Most assets that people have are not directly one-to-one replaceable. Some exceptions are things like your 1 ringgit note, but the vast majority are not fungible, are not directly replaceable. But in the digital world, most things are directly replaceable. So anyone who's ever like streamed a movie or downloaded a torrent, you'll know what I mean. Because you can have let's say a movie, but someone could create a copy of that movie or a copy of a piece of art, and there's no way for you to know which one's the original copy and which one's a pirated copy. But with this NFT technology, you can imprint originality to a particular asset. So if you have a piece of art, which is a lot of what NFTs are known for, the creator can put it on the blockchain and directly and clearly show that this piece of art is the original version. And so anyone who wants to be a collector can buy the real one instead of some fake copy-pasted version that someone else has done. And that gives a lot of ownership rights on the or in the online world that previously never existed. So people can do a lot more things with ownership in the digital realm that they couldn't do before. So I think that's pretty much it. Just a quick introduction to Ethereum smart contracts and some examples. If you go back home, you can think about like a whole world of possibilities of what you can do when you have these smart contracts or this if-then logic that can be added to a decentralized system. And before I end, I just want to quick example. So another use case for NFTs that's not art that most people would associate it with is that you could add a domain name to your blockchain address. So I could put, let's say, Harith.eth, and people just need to type that name to send any funds to my address or my wallet without having to find this very long stream of random characters that normally represent a blockchain wallet. And so before I stop, if Bitcoin is decentralized money, then Ethereum is decentralized applications. Or another way to describe it is it's programmable money. And my favorite way of describing it is unstoppable applications. So if you think about the example that I mentioned about Iran and Uniswap, you can create these applications that cannot be stopped by anyone in the world, no matter your politics, your religion, your financial status. Anyone can create applications that anyone in the world can use. And that's something that's extremely powerful that Ethereum has enabled the whole world. Thanks for listening. And back to you.
Thanks very much, Harith. Give a virtual round of applause for Harith from ETHKL. Funny story, the first time that I really had what's close to a deep dive, being previously a non-plugged in, non-Web3 person, was actually at an ETHKL meetup event, and that was at Sunway Uni. And I went through the long version of Harith's presentation, and I learned a lot from that. So yeah, if you guys have a chance, please do check out the ETHKL community and join in. And who knows, I just might see you there as well. Okay, cool. So now it's my turn. So hope you guys are ready for the next part of the ride. As the title, we revisit that again. What is Ethereum and why should you invest in it? I am going to be focusing on the why should you invest in it part. So Ethereum, as Harith has mentioned, is the second largest coin by market cap. That means that the value of all Ethereum out there that's available in the world is the second largest in the cryptocurrency world. Number one is Bitcoin, right? And what's that market cap? Roughly 1.3 trillion in terms of ringgit. A lot of volume, 55 billion ringgit traded a day. 120 million circulating supply. This contrasts quite interestingly with Bitcoin, which only has 20 million. So there's a lot more supply. And I think I'll keep it at, the key point is the box in the middle. It's the second most popular coin in the world. So I think most of us here have experienced what it's like to have this feeling called FOMO, FOMO, the fear of missing out. And I certainly have that feeling for a long, long time. Funny story, I was a non-believer in cryptocurrencies and I guess I had a better handle on what are the benefits of blockchain technology, but I misunderstood cryptocurrency at the time. And really, if I was a believer, and I think many of you are probably in the same boat as me, why didn't I buy Ethereum when it was at $1 US dollar in 2015? I would literally be a millionaire now, etc., all those kind of things, right? So yeah, it launched at about $1.40 if you see in 2015, and it went as high as 4,006 in 2021. And even though the price has fallen since then, you see that the trough after the 2021 peak was just about, I'm going to say 1,200. By the 19th of December, it has seen an 86% gain year to date, right? Mirroring a similar trend that we see in the crypto complex. Bitcoin roughly up more than 100% as I'm speaking right now. So I think from this chart alone, a couple of things become obvious, right? Number one, yes, you can be a long-term investor in Ethereum if you believe the direction in which it's heading to, and I'll talk about the factors that are driving that. But of course, the other half of us would be thinking, wow, wouldn't it be nice if I invested early in 2015? Wouldn't it be nice if I sold at 2021? And wouldn't it be nice if I bought back again in middle of 2022? It would have been nice. hindsight is always 2020, and unfortunately, none of us really have these 2020 goggles. So I'm here to talk about what those mean. I'm trying to break down what I just mentioned of likely buckets that our brains would have fallen into. And what is that? That's literally short-term investing versus long-term investing, right? So if I were to break short-term into really, really short-term, actually Ethereum, you have opportunities for day traders. It is volatile, just like a lot of other cryptocurrencies. You can have daily fluctuations of 5 to 10%, right? So there are people who may choose to trade it even on a less than a day basis kind of thing. And then there are long-term investors, where long-term investors should be, in our opinion, focusing on the fundamental role of Ethereum in terms of blockchain's growth and innovation. I think, as Harith has pointed out, Bitcoin has its role in the blockchain world, but Ethereum has a very different role as well. It is really the driver of applications and use case, if you look at it that way. So really, the value growth is over the long term, trying to understand Ethereum's expanding network, right, and diversification, all those kind of things, and how will that impact the value. Let's dive a little bit further into that, right? But first, let's talk about some of the short term. If you're a short term trader, we have some numbers for you that you might be interested in. So ETH, the currency of which the Ethereum blockchain utilizes, is in the middle of what we call a breakout. It's gone past a certain resistance level, and after that happens, it tends to usually rally further. So we see the next resistance at 2600. The nearest support line, although we wrote this earlier this week at 2150, it actually tested 2150 this week, but now has settled slightly higher at 2200. And we expect ETH to follow Bitcoin performance. It has similar narratives. You have ETFs coming up. Of course, the earliest ETF deadlines for Ethereum is VanEck, and they have deadlines in March and May, not quite as soon as Bitcoin with its January and March deadlines for the really, really big guys. And of course, some big guys also applying for an ETF in Ethereum. For example, Franklin Templeton, which is the 20th largest asset manager in the world. And again, I'll compare and contrast it versus Bitcoin, because Bitcoin, you've got people like BlackRock, which is number one in the world and literally 9 times the size of a Franklin Templeton. But essentially, the trend is there in terms of that ETF narrative cycle. Of course, once BTC eventually gets a ETF, but that's our view. It's an eventuality, not a if scenario. When they do get it, then the focus is likely to shift onto an Ethereum ETF. And with the Ethereum ETFs, you can expect a shorter turnover time, because a lot of these things have been actually smoothened out by having somebody else already broken down some of those walls. Okay, so that's kind of the short-term views for you short-term traders out there. And I know there are probably quite a few of you, but I'd like to talk a bit more about the long-term, right? And what are some of the factors influencing Ethereum's price of potential, especially in the long term? We have this thing called Metcalfe's law, or simple language called the network effect, right? So Ethereum's value grows as its network grows and becomes stronger and reaches more people, right? And of course, that impacts the demand, right? That impacts the demand for Ethereum. And of course, I think Harith mentioned about some of the applications and all those kind of things, which would increase Ethereum use. And those apps, using those apps, a lot of times you'll have to burn what's called gas. Okay, there is a fee for using these apps and even transacting and stuff like that, and that's called gas. GAS, kind of like what you put in the car and get it to drive. It's an American term, gas, but here we say petrol. But yes, ETH, you have gas, and when that ETH gas gets spent, it effectively reduces the supply. On the other hand, there is a mechanism for creating new supply, kind of like mining with Bitcoin, but it's called proof of stake staking. And the act of staking actually generates new Ethereum. So there is supply and there's also demand. And I think quite crucially about supply, there isn't a cap on a maximum number of ether that there can be, right? Not like Bitcoin. Bitcoin has a maximum of 21 million. And in Ethereum's case, there actually isn't a cap. But similarly, there is also something unique in Ethereum compared to Bitcoin, in which there is gas, and that actually uses up Ethereum, therefore destroying some of the supply. So it is a nice balance between those two factors. Of course, when I'm talking about the usability, the applications that are hosted on the Ethereum blockchain, the value is eventually also influenced by its internal upgrades, right? So I think it is what's called a level 1 blockchain. And level 1 blockchains can be notoriously slow to transact, all those kind of things. So a lot of the upgrades are focused on scaling the network, right? So making it so that you can include more transactions in a block. And what that means to the man on the street is that it's cheaper fees and faster transactions. So those are the kind of upgrades that will come up. And once it does become faster and better, it only increases the attractiveness of the Ethereum blockchain for hosting DeFi's and NFTs. Well, like it needed a lot of other attractiveness. It is essentially, if I talk about the broad use of applications in blockchains, Ethereum has critical mass. So anybody investing in Ethereum, I think, can take solace in the fact that it has never been unseated by another L1 level 1 blockchain, and it is pretty much the premier blockchain to host all these applications and stuff like that. Of course, the caveat is that when upgrades happen, if these upgrades are implemented in not such a good manner, this could impact the situation. But the current situation is one of strength, and Ethereum is at the moment a network with critical mass. So when we talk about the network effect, I'd like to step back a little bit and talk about some longer term trends to think about, right? Sometimes we're thinking of, well, you saw the earlier slide, the average holding time for somebody holding ETH is about less than 2 months, right? But let's talk about what it's like to hold it for like 5 years, 10 years, for example, right? And it's quite interesting. I love this chart. It shows total number of internet users in the 90s. So the first data point starts in 1990, and that's the light green line. And it's plotted on the same y-axis, which is total number of users, but a different time frame for crypto users, which is in the dark blue. So in this dark blue, the first year is not 1990, but 2014 instead. So you're talking about 24 years difference between the two, and yet you look at that trend, and there is no gerrymandering with the y-axis. Okay, we're not changing around what the number of users are and all that kind of thing. Is almost exactly the same number of users, and it is the same trend. So imagine if hindsight again, right? What if we were internet investors in the 90s? Today, anybody who doesn't have tech in their portfolio is considered severely underperforming, as Catherine Wood painfully found out when she decided to sell Nvidia earlier this year. So, needless to say, internet has become really a big part of our lives, and this is really that kind of same narrative that somebody can get in on by investing into crypto. And particularly if you're looking at the use cases, internet is all about use cases, right? I think it was David Letterman and Bill Gates sat down for an interview in the 90s, and he asked Bill Gates, what can you do with the internet? And back then, remember what the internet was like. I don't know if some of you are even born yet, but the internet was terrible in the 1990s. And he was asking Bill Gates, what can you use the internet for? You can use it to watch the baseball game. And then the interviewer said, well, don't we have TV for that? Okay, how about another use case? You can stream your favorite music. Okay, but don't we have radio for that? And we fast forward to today, those seem to be quite silly questions. So similarly, you cannot understate this network effect, and I would say the effect of utility as well. As the use cases grow and become more prominent, the network will only become more valuable. And what does that mean for somebody who's investing in Ethereum? It only means good things. Your value is likely to appreciate in the long term. So based on that, at Halogen, we are really advocates of long-term investing. It's not to say that we don't have a view on short-term and levels and all of that, but really the value is in holding long-term. Trying to time the market can be a fool's game sometimes. So how do we see long-term crypto investing? How do we see that in terms of a practical portfolio, right? Here's our idea, and I hope if you don't remember anything else from tonight, you remember one thing: allocate, don't speculate. So we are advocating consistent allocation inside inside your portfolios, and of course, fine. Not everybody's the same kind of investor. Some of us are conservative investors. We cannot take too much risk, or we have certain needs in our lives that we need certain liquidity and all those kinds of stuff, right? So if you're a conservative investor, that even then there is a place for crypto. What you're showing you right now are two portfolios that we've backtested side by side. We've done some analysis. The black one is with crypto, and the light blue one's without. And this is a conservative portfolio, and what we often call the business is a 30-70. So 30 means you only have 30% equities and 70% in fixed income, and that tends to suit someone who does not like a lot of volatility and all those kinds of things. So if we look at the conservative portfolio on a past 3 years basis, you're getting 22.9% return and 8.5% volatility, right? Okay, fine. That's a good base case for us to start at. So what happens when we put 2% crypto inside? Let's sacrifice 2% out of the equities, which also can be quite a volatile asset class. And let's put them into crypto instead, right? What happens? Volatile but high return asset. How does that impact the portfolio? Interestingly, okay, fine. The return thing we expected, right? The return goes up. 22.9 goes up to 26%. I don't think anyone expected otherwise, but also don't forget that in the past 3 years, we've gone from a peak to a trough and a pretty bad bear market. So despite going through that kind of bear market, you're still up. Adding crypto will still give you better returns in a 3-year period, right? Long-term investing. But at the same time, we all know crypto is volatile. We saw some of the volatility earlier on, right? 4,600, it went down to maybe somewhere like 1,200, and now is at 2,200. That is the definition of being volatile. So what happens when you put a volatile asset into a portfolio, into a conservative portfolio? Would you believe it? The volatility goes down from 8.5 to 8.3. How does it go down? There is a thing called correlations, and I won't get too much into it, but essentially when other assets have a bad day, crypto is having a good day, and when crypto is having a bad day, maybe other assets are actually having their good day. So that is essentially not being correlated in a nutshell. So really the benefits are there, right? The last column there shows the Sharpe ratio. SR stands for Sharpe ratio, and it looks at the unit of return. So the return that you're getting per unit of risk that you are assuming. And it is definitely a more efficient portfolio. 0.62, a higher number means it's more efficient compared to the portfolio without crypto inside, which is only 0.48, right? So here's one real, very, very clear case in point. And if we say, oh, but I'm not a conservative guy, I'm an aggressive guy, what does that mean for me? I've got you covered, my man. So let's flip it around. Let's do a 70-30 portfolio instead, okay? So 70% equities. Obviously this person's hunting for growth, and 30% in fixed income. You know, they don't need so much of a safety net, maybe a little bit, but not so much. So what does this kind of portfolio look like? In the past 3 years, you expect high return? Yep, high return. 52 versus 20 something earlier, right? Volatility, yes, it's also much more volatile. So with equities inside, equities are more volatile asset class. So it goes from about 8% to 14%. There is a clear increase in volatility as well. But you're being rewarded for it by having higher volatility, you're actually getting higher return. So what happens when we substitute 10% of that equities allocation and put that into crypto? Once again, the return goes up. I think as we expected, it's a high return asset. So 52 goes up to about 72%. That's a significant bump, even over the 3-year period. I think that's, well, to me, that's something worth going into. At 3-year volatility, it actually roughly stays the same. So you're getting more bang for your buck, so to speak, by actually having some crypto inside. So be it whether it's 2% or 10%, there is a place for crypto inside your portfolio. And that, of course, includes Ethereum as well. So that takes me to the end of my presentation. And I hope that I've left you with a good sense of why you should invest in Ethereum, particularly, and also, given you a bit of context about how to allocate and not speculate when it comes to crypto, because we've all been there. We think that we're buying at the right time and selling at the right time. What is the adage? You want to buy low and sell high, but sometimes it happens you buy high and you sell low. So that's one way to avoid it. Think slightly longer term. And of course, maybe you can also have a little bit of allocation for yourself to go out there and spin that wheel. That's also fun to do. But for your long-term goals, consider investing long-term. So thank you very, very much. Over to you, Jaying.
Okay, thank you so much, Harith and Fuad. So yeah, thank you so much for the very, very insightful sharing. And I do see that we have some questions, but before we go into that, allow me to reshare my screen. Give me a second. Give me a second.
For you, we'll give 5 seconds.
Give me a second.
Also, shout out to the webinar chat section. People helping me out with the ETF thing. That's cool. I try to not use that many acronyms, but I sometimes fall prey to the alphabet soup as well. So thank you, Calvin C, for helping us answer Cassandra's question.
Okay, yeah, before we go into the Q&A session, so I'd like to take this time to allow me some time to really share a little bit about what Halogen Capital does. So to those of you, I see that earlier that most of you mentioned you're tuning into a webinar for the first time. This is probably your first time hearing about Halogen Capital as well. So in short, Halogen Capital, we are Malaysia's first ever licensed digital asset fund manager, specializing in digital asset and innovative investing. So, and not only that, we are also licensed by the Securities Commission of Malaysia. And these are at the same time we also have a very highly experienced leadership team with institutional backing. So just to paint a picture for you on what we do, for you to better visualize. So if you can see on the screen right now, right off the bat, I'm sure some of you probably have seen a few household names already. So for example, for your traditional assets, you have your Rakuten Trade, you have your CGS, you have your M Plus Online. And then for the digital assets exchanges, you have your Luno, you have your MX Global, you have your Synergy. And then for the fund management side, you have your Public Mutual, your Aham Capital, AHAM, and that's for the fund management side. So now you might be curious, okay, where do we actually sit? So if you can see on the screen, we actually sit at the intersection of them, offering you access to both traditional and digital assets as a fund manager. So this is in short what we do. And for those of you who are still here and tune in until right now, we have a very, very special news for you. And this is, we are just releasing this news right now, right here. So don't blink, right? So if you're intrigued about the prospects of Ethereum, on what Harith and Fuad have just shared, we're happy to share that we will be launching the Halogen Shariah Ethereum Fund very, very soon. So what's this fund about? Let me explain. So in short, these are some of the key highlights of our Halogen Shariah Ethereum Fund. So the main highlight is it is actually the first Shariah compliant wholesale fund that invests in Ethereum with the proof of staking feature, right? At the same time, if you are someone who want to invest in crypto but want to invest in crypto but you don't want to be managing the keys and the password of the wallets, this is also the fund that could be of your interest. Then at the same time, this fund also holds up to 99% of physically held Ethereum, and we also have a SC registered trustee, and we're also approved by approved and also approved digital asset custodian third-party custody of Ethereum. So in short, this is some of the key highlights for Ethereum fund that is coming really soon. So minimum investment for this fund will be 10,000 ringgit and with a T+1 liquidity. So take your screenshots, or if you want, this is actually one of our latest announcements, our latest funds that we like to share. And that's not it. So okay, that's not it. So for first 50 customers, we'll actually, for first 50 customers for this Ethereum fund, we'll actually be getting something really special, which will be revealing more in the coming weeks. So, but what you can do right now is you can register your interest with us first by scanning the QR code on the screen here, or if you're on your phone, it's not convenient for you to scan, you can just head to halogen.my/contact us. So in short, this is one of our latest funds, latest announcements. And if you are really interested to get to know more about the fund, you want to get more information, you want to understand more about the prospects and everything, feel free to register your interest, and our team will get back to you in as soon as possible. Okay, so I think that's a little bit about Halogen Capital, what we do and what's coming up for us. So hope you learn something, and then let's go right into the Q&A. Give me a minute. Okay, so I think we have a few questions right in the chat box and in the webinar chat, and also the Q&A box. So let me go to the Q&A box first. So, okay, we have one from If1. So, hi, I have a question. For the past 2 days, I've met someone in the blockchain industry. He's working with NFT company based in Russia. So he's a programmer and a developer, and he said that he doesn't see any ideal use case for blockchain. He gave me some examples. Blockchain can't store big data, for example, images. All the images are stored in AWS, centralized. Only metadata is stored in chain. So he also argued with me that the online M2U is more faster, has more faster transaction than wallet transfer or P2P. So he doesn't think that banks will move to blockchain. Any comments on this? And that's the first question, first part of the question. Then is there any business use case that's proven with blockchain? Yeah, maybe Harith, you'd like to take this?
Sure. Yeah. I want to say that if one, it's a very good question from your friend. It looks like he really has been in the space, and it's valid concerns that have been raised. For those who don't know, a lot of NFTs are actually like what Ifwan's friend has described. The art itself is stored on a centralized database, and only the kind of metadata, or another way to describe it is the pointer of saying where that asset is, only that is on the blockchain. Whereas the asset itself or the art itself can be on a centralized database that the company can simply delete or change without anyone being able to track. And that goes against the idea of decentralization, of transparency. So that's a big complaint that people have against the current NFT market. What I would say, without, because the answer for this question can be extremely long, but for a short summary of an answer, is that as Fuad mentioned, we are in the early stage of the sort of 90s when it comes to internet. So for crypto and Web3, this is very early stage. A lot of the world-changing ideas that you might hear some people trying to sell you on are not necessarily feasible yet. It's like how if you wanted to do Netflix or Facebook in the early 90s, people will laugh at you and say it's not possible. So the current state of blockchain technology is that I think also, like Fuad mentioned earlier, is that it needs to scale by a lot more. It's extremely expensive even to do simple stuff. So it needs to be scaled by orders of magnitude for it to actually be making real impact in the world. A couple other points is that you can see some big banks, some governments even that are exploring use cases of blockchain technology. Maybe not in the public permissionless way that I would prefer, but it is using blockchain technology where there are different entities instead of one trusted entity. If you've heard of another jargon or acronym called CBDC or central bank digital currency. So a lot of what central banks or governments have been planning on that uses blockchain technology as well. So it is applying a form of that technology for real world use. And I would say I kind of touched upon it a little bit earlier, where if you imagine you were a Syrian who had to leave the country because it was going through war, and being able to exit your situation with a big chunk of your wealth with you, and how that has not ever been possible in human history. Just that alone, that value add of being able to do that is something extremely powerful that has never existed before. I'm one of those people who don't believe the technology is ready, but when it is, you can imagine a lot of use cases that could be done that could disintermediate these powerful and kind of comfortable centralized entities who have become too big to fail, and you could come up with community or decentralized alternatives to these too big to fail companies. And if you're interested, we can go on this conversation a lot more, because I can go maybe like another hour on this topic. But yeah, that's a rough gist of an answer.
If I can throw in a quick quip about this, right? I like the example. M2U is faster, the transaction and wallet transfer, yes, and P2P, yes, but that in itself, I can give you a perfect example of when decentralization is actually better. Have you ever gone to Maybank and then they tell you, sorry lah, tak boleh keluarkan duit, a system down. In English, it means, sorry, you can't withdraw your money right now because the system is down. Has that ever happened to you? I know it's happened to me many times. So if you were decentralized, that wouldn't have been a problem at all. Simple answer. Yeah.
And yeah, so like just try and make a transaction. I'm not sure if it's changed now, but at least until maybe 1 or 2 years ago, if you try and make a transaction on Maybank to you from 12 to 1 a.m., then you are not able to, even though it's online, because Maybank is in maintenance mode. And something maybe a bit out there to consider. Another hype thing right now is all this AI technology that's happening. So you can imagine a world in the future where these AI agents are the ones that are transacting with each other, and they are doing it globally across different borders, different countries. And to be able to do that, they would need some sort of currency or some sort of financial system that isn't limited by any geography, that is used by everyone around the world and isn't blocked by any jurisdiction. So a blockchain kind of backed currency could be an ideal use case for that. But this is just another one of more theoretical use cases.
Right. Okay. For if one hoped that answered your question. So okay, next one. Maybe this is more for Fuad. So when you say long term, how long is that in terms of the minimum number of years?
Well, it really does depend. If you're investing in crypto and you go through, what is a potential downturn and maybe not so nice experience in terms of investing, would you be able to ride it out? I think that's the most important concept to go by, right? And if you're conservative, then I think look back at some of the examples that we showed you earlier. Maybe only limit it to about 2% if you're conservative and you feel within 3 years I may need a significant sum of money back. But if not, the longer the better. Remember we talked about the 90s till now. So we're talking about the next 10, 20, 30 years. So the longer the better.
Okay, I think we have one question from Kelvin about the Ethereum fund. So does the proof of stake Ethereum fund means we will get a yearly yield from staking? It is proof of
I'll take this in terms of the context of how we envision it for the fund. So when we do have enough to spark up the validator node, which is 32 ETH, the rewards are technically paid out, or you can reflect the rewards even in a matter of seconds. It's less than a minute kind of thing. So actually, you don't have to wait for a yearly yield. There can be even short dated yields. For the purpose of the fund, we will say that those yields would be reflected on a daily basis when we do our daily net asset value calculation and when we value the fund every day. So that would be how we do it in the fund. Yeah.
Okay, so next question. Are NFTs still relevant in this period, or are the use cases significantly diminished in the current situation? So I believe this is more for Harith.
I think the hyped market of NFT art may not be as big today as it was. But if you think back about the examples that I gave about how NFTs are about being able to prove non-fungibility, to prove uniqueness in the digital world. If you can think about any number of use cases, then it's not about art. It's about providing ownership in the digital world. So the space for that is endless. Just off the top of my head, you can think of like unique game assets that you can own and you can use across different games instead of just one. It could be providing titles to even real world assets, but have it be done on a transparent blockchain that you don't have to trust some potentially corrupt government entity to hold that data for you. Yeah, so just think about anything that you want to use to prove ownership or uniqueness in the digital world, and that's the potential market for NFTs. If you're asking about which NFT you can buy over the next 1 year, then I'm probably not the best person to answer. But yeah, on a wider scale, that's the use case of that technology is almost limitless.
All right. Okay. Next question. Maybe this is more for Fuad. So, is there any fund plan for smaller investors, smaller retail investors with minimum of 1,000 ringgit to start off with?
Good question. Unfortunately, it's not in our immediate product stack just yet, but keep your eyes peeled. We may have some collabs and all that that will enable us to do something similar to that. But yeah, that's my answer.
Okay. Okay, from Chanduru. So recently I observed that the Ethereum transaction wallet charges quite high. For example, if I send $100, only $20 is received. So why is that so? In this case, I feel that online bank cash transfer is better, right? So maybe this is more for Harith.
Yeah, that definitely is the case. And as mentioned, we are in that early stage of the technology that it doesn't scale. You can think of like, imagine the Plus Highway when it is Raya or Chinese New Year time, and everyone is trying to go back to their hometown. Because there is a limited supply of lanes on the highway, and there is a huge number of cars that are trying to use it up. So the highway gets very congested. So similarly, for any blockchain, when there is a lot of people who want to transact on it, then it becomes very congested. And in the case of blockchains such as Ethereum, you can imagine this hypothetical lane of highways where the people who get to go first need to pay more. It's an auction. So the more you pay, the faster you can go, or like you can skip more cars in the queue. So if you pay more, you get to get your transaction to go faster. Otherwise, you have to wait in the line for everyone else. So if you want to make a transaction, you have to pay a fee that is higher than others. So when there are a lot of things, a lot of people trying to make transactions, the market price of that fee goes higher and you have to pay more. And if not, you just have to wait for an indefinite amount of time for your transaction to go through. But yeah, so that is the current state of the Ethereum layer 1 blockchain. If you're interested, you can explore. There are what's called layer 2 blockchains on top of Ethereum, where it's been a lot cheaper. Not exactly super cheap, but definitely a lot more accessible than the layer 1 or mainnet Ethereum. Yeah, but it's probably kind of a deeper conversation to have.
All right, but this, I think this segues perfectly to the next question. This is, I guess, is to Fuad, which is, would the fund eventually expand into L2 offerings built on the Ethereum ecosystem? I think this is a good one.
We would love to, but step by step, step by step. And to maybe recollect the steps that we've done so far, we've only got license since April. We're licensed by the SC, Securities Commission. I saw somebody asking in the non-Q&A box, so I hope that answers the question as well. And since then, we launched the country's first cryptocurrency fund, which was the Halogen Shariah Bitcoin Fund. And now we're about to launch our second, hopefully in a matter of weeks, which is the Ethereum Fund. And we need to build on top of that. Let's go with the biggest and trickle down. That's our approach.
All right, I think there's another question. With new coins coming out almost every single day, is there a large probability that established coins like Bitcoin and Ethereum be replaced by another coin in the future? Will this affect our long-term investing in these coins? I think maybe both of you.
If you don't mind, I'll just put in my quick thoughts, and then Harith can do a deeper dive.
Yep.
Yes, essentially, this is the risk that's involved in investing in cryptocurrency. This is the risk that you take, and you don't get a return without actually assuming some level of risk. But of course, there are some things that you can look at to maybe hopefully mitigate that risk. Ethereum has had many would-be usurpers that were trying to come in and say like, hey, we can be the new Ethereum, we can be the new Ethereum. Since 2015, 16, 17, even as early as that, you had a lot of people saying like, I can be Ethereum, and they never do. Just an example. A lot of people say like, okay, we can replace Bitcoin as the new store of wealth in the Web3 world, and they still never do. And the Bitcoin thing has been more than 15 years, right? So you can take some solace into track record, but I cannot tell you that the possibility of somebody usurping them one day is zero. So that is the risk that we take as investors. So it pays to take a calculated risk, aka don't put all your eggs in one basket. Cheers.
Yeah, and I think to add on, going back again to the analogy of the 90s internet, you can imagine if you bought, let's say, Google or Amazon stock like way back in those days, you'd be extremely wealthier today than you were back then. But you could potentially have bought some other like .com bubble stocks, like say pets.com, and instead of having like thousands of multiples in return, you'd end up with $0 for your investment. So that definitely can happen. And when it comes to newer blockchains, definitely there could be something that gets created that kind of learns from the mistakes or the experiences of past blockchains and becomes very like solve those problems and becomes much more efficient. But at the same time, there is this thing called a network effect, where if something has been an incumbent, it gets very hard to displace them because everyone's used to it already. Everyone knows of that brand or that name. Another analogy is if you think about your keyboard, the QWERTY or QWERTY keyboard, it's what everyone uses now, but it's not the most ideal positioning of each characters. But it got created way back then, and because everyone's gotten used to it, it gets very hard to try and shift away from that design of a keyboard. So those are some kind of thoughts that you can consider. And yeah, nobody knows what the future will hold.
That's true. Okay, I think we have probably time for maybe 3 or 4 more. So, okay, from Chandaru, frequently we are hearing news that some countries will ban cryptocurrencies. What happens if such a thing happens?
Well, quite simply, China has tried to ban Bitcoin like what, 2, 3 times. And when you have to ban something more than once, especially a country like China, where in most matters their word and the rule of law is quite severe and people get quite scared and they don't dare to do anything against China, Bitcoin is still being used in China. So that's likely what will continue to happen if people say like, yeah, we'll ban, we'll ban, we'll ban. It is decentralized, and goes back to Harith's example about Iran and all that kind of thing. You can ban it as much as you like, but can you stop people from using it? Yeah.
Yeah, and it's like just think about torrents, and how torrents are not acceptable, not kind of okay with authorities, but the whole world still uses torrents, even in the days of Netflix and other streaming providers. And one thing I guess to also note is that Malaysia, as a the authorities in Malaysia have been relatively open to blockchain technology. So with all these licenses, such as the one that Halogen has had, so it does look like Malaysian government is open to the technology and it's not trying to ban it kind of unnecessarily. So at least for Malaysians, I think that shows a good position that the government is having towards this technology. And I would say it comes back down to us, the people or the community, and how we use this technology. Like as with any technology, you can use it for good or you can use it for evil. And if the vast majority of people use these technologies for good and prevent their peers from using it to defraud or to scam others, then I think generally governments would do what's best for their people as well.
Okay, I think there are some questions about the fund still. So there's a question on, so by Ezra, how about the payout? And uh, and are we considering, are we considering to have
It's okay. Let's do the
Bitcoin
payout one
ETF?
fast and
Yep.
easy. So payout, we would if you're referring to it, does the fund pay distributions? It does not. So if you want to take profit on the fund, you just have to redeem either the profit or whatever other amount that you want. But the fund itself doesn't actually do any interim payouts on a regular basis. Yeah, so it's up to the investor to actually take in and take out. Fortunately, we do have an easy way to do that. We have a portal called Halogen Wallet, wallet.halogen.my. And using that, hopefully, we can make it easier for you to be realizing your profit if and when you need to do so.
Okay. Then next question would be this: do we plan to have a Bitcoin ETF?
Yeah, so ETFs can be a little bit hairy situation in terms of it involves more regulators, which is why we decided to go with the first step of just doing a ETF, but you destroy the E, so there's no exchange. It's not exchange traded. It's just a fund. But yeah, sure. At one point, once we build up our business, we would love to look more into that, going into a BTC ETF.
Okay, I think by Samad. So once your validator node has been set up, would it eventually be possible to directly stake into your node via wallets such as MetaMask and Trust Wallet?
Yes, thanks for the question, Samad. So, unfortunately, the Ethereum fund, your on ramp and off ramp is only going to be via ringgit. It's only in fiat currency, so that means that you're not able to do any of this stuff that is interfacing with Web3. But who knows? In the future, maybe hopefully we can get that done. And also shout out, he's been very supportive in the chat of my non-halogen endeavors as well. So thank you very much. Yeah.
Okay, I think not your key, not your asset. Okay, I think we can wrap up with just one last question from Ramas. So my question, why Ethereum always follow Bitcoin? Is there any pattern? I think quite interesting question as well. Maybe for both of you, perhaps. Is there any pattern?
I imagine you mean the price movements, right? Between
Mm.
the asset and the
Mhm,
Bitcoin asset
yeah.
as well. I wouldn't say it necessarily one follows the other. There have been times where, for example, Ether's price goes up or down before Bitcoin's price does. But there is this correlation thing that Fuad mentioned. When it comes to crypto, a lot of people like think of it the same way. So you buy one to them it might be the same thing. So if you are looking at it from a allocation point of view, comparing crypto versus other types of assets, then you might just want to like put your funds across them both. But if you look at the long-term historical prices, you can see a big difference. Just obviously when the Ether asset was first launched versus today, the price comparison between Ether and BTC is extremely different. So yeah, I think there's definitely a lot of correlation, but you can see, especially when you zoom out, that there's differences.
What, will you add anything on
Nope,
top of
all
that?
good on my side. But I would like to address a neat little quip that somebody put in the chat there. Ida Ezra saying, "Not your key, not your asset." I'm happy to say that yes, we agree, which is why for all of our funds, including the Bitcoin fund and including the new Ethereum fund, we have an SC registered trustee and digital asset custodian. And if you're not familiar with asset management, these guys actually look after the asset on your behalf to the point where if you were to actually accidentally pass away and all of that, these assets are easily go into your estate planning and legacy planning as well. So, in a sense, it solves one issue about what is the risk of stranded assets if there was an unfortunate accident, for example. So, yeah, we agree, which is why when you invest in any of our funds, they are your keys and your assets.
Okay, I think thank you so much, Harith and Fuad. I see we have more questions, but I think that's all the time we have for today. So, but yeah, for those of you if you still have questions, just hit our socials and then leave us the questions, and we will definitely get back to you as well. So at the same time, I just want to thank Harith and Fuad for today's session. And for Harith's side, he's also an organizer at ETHKL. So if you're keen to get updated on Ethereum Malaysia's events, I've left the link in the webinar chat for you all to have a look. And if you're still interested, and for Halogen Capital site, if you're interested to get to know more about funds and what we do in general, feel free to contact us at halogen.my/contact us. So yeah, I think that's all the time we have for today. Yeah, stay in touch with us. As you can see on the screen, these are all our socials, and then I've also shared the link to ETHKL's meetups. So do get connected with us through there. And thank you so much, everyone, for staying up until now and staying for our webinar. And yeah, I hope you all enjoyed and learned a thing or two. And we hope to see you in our next one. And hope you all have a good Christmas break as well. So yeah, see everyone in the next one, and thank you so much for being here. See y'all soon.
Thank
Bye.
you.
Thank
Bye,
you.
everyone.
Good night.
Thank you.
Bye,
Bye.
Samad. Bye. Happy holiday. Yeah, bye. See.